All right, let's talk about the global investor sentiment that we're seeing. It's the largest monthly increase in more than 4 years. That's according to the latest fund manager survey out from Bank of America. Yahoo Finance's Josh Schafer is here to break down the highlights. Josh, you've been spending some time on this morning.
Yeah, so BofA's global fund manager survey for October coming in and saying sentiment took its largest rise in more than 4 years, going back to June 2020. Remember, that was when we were coming out of the pandemic, and you saw a lot of sentiment indicators take pretty big increases. So that's a pretty eye-popping area for this to be related back to. Kind of the key thing that goes into that is it accounts for investors' allocation to cash, their allocation to equities, and then how they're feeling about the overall economic growth expectations for the coming year. So investors said that they now see more likely scenarios of a no landing scenario where the economy would keep growing, or a soft landing, hard landing where we go into recession. That's coming down. So that's kind of your economic narrative piece of this. Now it does come with one warning sign here. So cash allocation from investors falling below 4%. That has been a contrarian indicator in the next month. In 3 months, when talking about global equities, when talking about something like the MSCI, that normally falls. For instance, the last time we saw cash allocations below 4%, it was June of this year. What happened in July and August, right? That was our little bit of a pullback. That was our near-term top. But overall, Michael Hartnett in this survey still saying that we have not reached kind of peak bullishness. That would normally come with a different indicator that BofA has that is not pointing to that yet. So yes, some signs of pure optimism here, but I don't think that's necessarily surprising when we keep talking about record highs in the stock market every day.
Day in and day out.
And we keep talking about resilient economic data. Of course, investors are bullish.
And we keep talking about big tech names that continue to make all-time highs. I mean, the narrative, the setup, it's hard to argue with. I mean, there are obviously always areas of risk and weakness here going forward. But again, the overall setup, and like you're saying, the takeaway from the survey, at least mine from quick glance, is that overall it's very positive, and investors are very optimistic maybe about the next couple of months.
Well, yeah, and it's what it comes back to in the economic backdrop as well here. According to the survey, 76% say that they're accepting and expecting a soft landing, 14% say no landing, and then 8% they're saying hard landing as of right now. So that's some of the trading backdrop into the resilience mindset that many investors are.
And it adds up with what macro equity strategists have been telling us, right? UBS's Jonathan Gala out with a note today saying that he thinks the S&P 500 will end next year at 6,400. That's a boost from 5,800 that he had initially seen, or sorry, his 5,800 was his 2024 target. He went from 6,000 to 6,400 for 2024. But he's writing in that note, just the economic backdrop right now is supportive. You're looking at strong GDP, the Fed is cutting, recession risk seems low. You kind of need, and this is what strategists told me when we talked about the 2-year bull market anniversary and what ends this bull market. Right now it feels like you need a shock. You need that labor market narrative that was building to boil back up, right? Or you need the shock that no one knows is coming to happen, or something that is not currently seen needs to come into picture here to change the narrative. Because right now you're looking at earnings growth almost double digits this year into double digits next year. It's simply just a good backdrop.
Yeah, and I think that's also the narrative that we heard from John Solfis here this morning. He's obviously very positive. We're up against his year-end target, and he was saying that the next couple of weeks are going to be critical, and there's a lot to like within this market, even just taking a look strictly at momentum right now. But one thing that was interesting to me was what he brought up in terms of election. And it seems like overall, yes, this could add a little bit of volatility, but it seems like strategists, even within these fund manager surveys, are very much looking past ultimately the impact it's going to have. Many of them pointing out the fact that, yes, it's going to add some of that near-term bumpiness, but in terms of that longer-term impact, they're not too worried about the next several weeks.
It seems like the election conversation is basically, we're going to get volatility. How much does it actually bring down the major indexes? And then when we're talking about where we could end the year or where you could end next year, you're just starting from a lower point, right? So if we do get a significant drawdown, because there is perhaps more uncertainty around this election than you would normally see, if that is something that plays out and you do see a big drawdown, then your S&P 6,000 call for the end of 2024 maybe comes into a little bit of question because we had a sell-off, right? If we don't actually see that drawdown, then that's why people are starting to come out and pound the table for something like S&P 6,000 by the end of the year, because right now you're sitting above 5,800. It's not that far. It's about 2% to get there. So does the election bring in enough vol that you actually get a real drawdown, maybe a 5 to 10% real drawdown? Then it's harder to get back up to some of these levels. But where things stand right now, there's not a lot in the way.
That doesn't seem like it. All right, Josh, great stuff. Thank you.